Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Monday, November 10, 2014. You're looking at a daily chart of the SPY, and we had another up day. It's really been just a grind higher, and I think I've got a beat on where we're going from here. But first, let me just recap a couple of things. Remember a few sessions ago, or over the last few sessions, I discussed a target for the ES, which is the S&P E-mini futures contract, which I can calculate numbers on a little bit easier than the SPY or the SPX cash. So I used that to calculate my figures, and I came up with a number of 2032. And as we sit here right now, or as I sit here right now, after the market close on Monday, we're at 2033. Now, we hit 2032 on Friday. We hit 2032 and a little bit higher today. There is one more number coming. And the number on the S&P the ES contract is 2050 to 52. 2050 to 52 is the next upside target should we move higher, and I believe we will tomorrow, maybe possibly into Wednesday, but that should be it. So if we reach 2050 on the ES contract, that'll coincide with about $1.70 higher than we are now in the SPY, which would put us roughly at, call it anywhere from 205 to 225. We'll call it in that neighborhood, give or take 20 cents. So figure, just say 205 plus or minus 20, 30 cents, something like that. So if we get up there, and we're up there either at the end of tomorrow or first thing or early on Wednesday, here's the deal. Stone cold short. That's the deal. If we get up to 2050 on the S&P E-mini contract, stone cold short. We'll probably go right back down to 2005 in short order. So there's a prediction for you. There's a high probability trade if that happens that way. If we're at 2050 by next Monday, no deal. That's off the table. Something else is going on. I'm just saying what I see based on my work, based on how the market acts and reacts. If we're at 2050 within the next 24 to 48 hours at the latest, okay? I don't even give it that much. It's really got to happen during the day at latest on Wednesday. If that happens, stone cold short, okay? The market's at a big inflection point. It's an inflection point for gold. It's an inflection point for the S&P. It's an inflection point for the dollar. It's an inflection point for oil. Everything is at an inflection point, and it should culminate on Wednesday. So take note, because this is very, very important. Okay, the market is at a critical juncture. And what I think is going to happen from this point forward, if I'm right, and we get up to 2050 and reverse back down for about 45 points or so, certainly could go lower than that, but that's what I can see. That's on the horizon. We can go right back up again. So we'll talk about that as we get there. If these things develop and play out, I'll give you my thoughts on where we go next, as I always do. But this is what I see based on my work, my common sense technical analysis, my hardline technical analysis, my mathematical analysis, and all the rest. It's 2050. It's really 2052, but we'll call it 2050. That's close enough. And that should happen. I would expect that to even happen tomorrow, Tuesday, on the 11th. I would expect to see 2050 stone cold short. Okay, let's move on. Let's go to the gold market and let's discuss what happened and where we go from here. So right now, gold futures is at 1153. Okay, now this is the GLD that you're looking on the screen, and we had the big up day on Friday, and then we reversed basically all of it today. Now, normally, that's not healthy. However, as long as we stay above 1150 on the futures contract, it's still in a bullish position, and I would still expect higher prices at least up to 2065 to 69, and then possibly back up to, 1165 to 69, and then back up to retest the 1179, 1180 where we were on Friday. And that would coincide with this high here in the GLD. I don't have any higher prices on my notepad right now, but that can certainly happen. We'll see what happens when we get there and how we arrive at that number. But I would expect that also to occur between tomorrow and Wednesday. So a lot of things happening right now in the markets. It's very interesting. In my work, I work with cycles a lot, and as I've discussed before. And I have this week as a weekly top for the S&P, and I have also a weekly top for the gold market, and I have a top for the oil market. Now, any market can invert on the cycle basis, tops and bottoms. So I'm not saying this is absolutely 100% going to happen. I'm just saying what the cycles indicate. And if we fail in gold or we fail in oil, which I'll talk about in a minute, then gold has much lower prices ahead. We'll go. Don't forget, I mentioned to you with gold that we would probably target the 1125, maybe down as far as 1100 on Friday evening, late Thursday into Friday. We hit 1130, so it was off the 1125 mark by $5, and then we reversed higher. But we didn't put in what would normally be a solid low. And what that means is this day here should have come on very high volume. But what was interesting was, if you look at the gold futures contract, that day on Friday did have very high volume in the futures contract, but not enough high volume in the GLD. It's interesting. It's like an intra-market divergence, and I don't even know what to make of it, but I'm going by the GLD, and if I was gauging the GLD, and I would say, did it make a bottom here in order to catapult higher? I would say no, because we didn't get a high volume reversal day, and you need to see a high volume reversal day in order to put in a real solid bottom. So my thought process is there's still lower prices ahead for gold. Not to say we can't go higher, not to say we can't chop around first, but I still say there's lower prices ahead for gold. We did not put in a solid bottom, and I stand by that. Let's move over to oil. Oil's doing the deal where it's basically beating on $80 a barrel, and it can't get through. It opened up today and went up to $80 or close to $80, and then it backed off. And it's done this, I think, 3 times so far. And, even though this could be considered a bottoming in oil this day and this day, very high volume here, and then you had somewhat of a doji candle here, which is this narrow body bar here. And that could be somewhat of a bottoming tail. It really wasn't, because it didn't have the high volume, but the day before had the high volume. But we're still, it's still, again, it's just like gold. I think we just need one more flush in oil. I think we get back to $75, maybe $74 a barrel, and maybe we reverse off of that higher, but I still think there's lower prices ahead for oil. So lower prices ahead for oil, lower prices ahead for gold, higher prices ahead for the stock market, and then we reverse lower. And in fact, let me show you a couple, just an indicator or two why I think there's higher prices for the stock market. Sometimes we look at IWM for an indicator, and you'll notice IWM looks different up here than it does for the S&P. Let me go back to the S&P and show you. Take a look at this, okay? See how this is chopping around, not really making a consolidation pattern, and a consolidation pattern would look like this. We move up, we go sideways for a while, and then we push higher. Let's see if I can find even a better one. We move up, consolidate sideways, move higher. Okay, that's a consolidation pattern. Well, we're not getting that here. We're getting a float higher and just a daily float higher. We've had like 18 days with only one down day. I don't even count this as a down day. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19th day. These aren't up days, but they weren't down days. They're just float days. These are even days for the most part. When you finish with these narrow body bars, that means the open and the close were in the same area, even if it was down a few pennies. We don't count that as a down day. But when you go back to the IWM, this is a consolidation pattern, which means the market probably wants to move higher. And I think there's probably enough juice to even get through this high here if we're going to go higher. And another one is the Qs. So the NASDAQ market is doing the same thing as the IWM. It's consolidating sideways, ready to blast off higher. But the S&P is not. So that's almost, it's not a real intermarket divergence, but it's almost a divergence in the way I look at and read markets, because they all should be acting together. They should be acting the same. Don't forget, the IWM went down, went back up. The S&P went down, went back up. The Dow went down, went back up. The Qs went down, went back up. Everything went up and down together, but now the Qs and the IWM are consolidating sideways, which means, in my mind, higher prices are coming. So higher prices are coming in all markets, and then I think we reverse, and I'm using my E-mini contract number of 2050, really 2052, as the number for the stone cold short. And that's where we are. I think I've given you pretty good analysis tonight. I'm just going to leave it there. We're probably going to get a higher market tomorrow. Don't forget, tomorrow's Veterans Day, and thank you for any veterans out there. Appreciate your service very much. And the bond market is closed for Veterans Day. So when the bond market is closed, normally the stock market will move higher. So expect higher prices tomorrow, possibly into Wednesday morning. We'll see. And then a reverse lower. And that's where we are. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.